What is going on, everybody, and welcome to another weekly update. And in this video, what I like to do is provide you some earnings, some events, and some stock picks that I am looking for. But as always, I like to give you a state of the market to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing because I do provide daily updates as well as the markets change on a day-to-day basis. So, being said, state of the market, where are we at currently? We are post Powell, so we have gotten rate raises. And over the past week, we've seen a massive push in the beginning of the week, and then we stalled a bit and continued to push up. As you can see, it's been a very it's been strong in general. The market has definitely been very strong, but we didn't quite pull back quite a lot. I think at this point, a lot of people are starting to FOMO, considering as soon as we got Powell news, we essentially jetted from that point, then stalled. We had a bit of a pullback, which you could say is enough because it did tag uh, the 50 EMA on the break and it started to push. But ultimately, what I've been looking for is a deeper pullback back to this uh, 44.30 mark is what I'm looking at in the general index. Now, again, going back to the state of the market, post Powell, we know time frames now. We know in May that we're looking at a possible double rate hike. We people are essentially saying that we could potentially asset purchasing will stop as well in May. That is really dependent upon the war and what's going on with Russia and Ukraine. That element is still there. That element is surprising people why the market is pushing up. But something I keep reiterating is the fact that the market is not what's going on in the world. Again, any new events that happen in the world, yes, they drive fear and they will cause a market to sell off. But continued uh, prolonged events like the war aren't going to really make the market continue to sell. Yes, initial sticker shock will do that, and then continue on in earnings like we're going to see. We got earnings coming up in a couple of weeks. You're going to start seeing the impact of sanctions and lockdowns and what they do on earnings statements, but that is not going to continue to sell the market off, right? If the stock market was what is going on in the world, uh, we'd be looking at a very different stock market than we are now. And there's always that expectation in something that the Federal Reserve is supposed to help with, is to allow people to have 401ks and allow people to grow 401ks. And how would you be able to grow your 401k if with every major event that happens in the world, the market's just going to continue to sell? Then there would be you would have no investment. Why would people want to invest money in the stock market if it just continued to sell on every major event that goes on? So you have backstops put in place to essentially help bail out the financial system and help continue to push it up so that people can invest. People have something to invest in, which is one option, again, being the stock market. So it needs to continue to push. So bad events are always going to occur, yes, and they will drive some fear and cause some selling. Uh, Again, this is why the Fed purchases bonds to provide that backstop for the banks, so people don't withdraw all their money, and then the banks are left with the bag, and essentially they can't refund everybody all their money at one time because they don't have that reserve capital. Yes, they could sell, but again, they don't have that liquidity, so it's going to be an issue. So, being said, the market will push up unless there is new news. Unless, again, something I've kept reiterating, and I know I sound like a broken record, but it's worth saying. If China comes in, that's going to change the dynamic. Depending on what side they go on, they've been pretty neutral for the most part. Yes, they're still going to trade with Russia or whatever they're going to do. Yes, they're going to make statements about the West, and they support the West. You're going to get mixed signals, but ultimately understand they're trying to. I think they're trying to take a more neutral point to everything. So being as long as they continue to stand neutral, now if they go with Russia, that's going to drive a lot of fear in the market. If they stay with the West, that's going to provide some bullishness to the market. So you have to understand which side they play. I think this is why they've remained neutral thus far, and I think will continue to remain neutral. But again, that can always change. And then you have right if the war stops, it's going to be a more bullish sentiment to the market as well. But right now, the market uh, again had one of the biggest correction. It's had a 15% correction on the index. A lot of individual stocks have been hit uh, a lot. A lot of stocks are have been normalized, right? And something that needed to be done because with a massive amount of money being pumped in the market, a lot of these stocks that you thought were really great at one point aren't going to be so great because of the fact that it's not being held up by individual investors, right? There was so much money being flushed into the system that people were just buying stocks because it sounded good and the future potential, right? This is also why people, have that. People talk about Tesla and future potential, but Tesla is a different animal in itself. But and looking at Palantir and NDM, right? Looking at a lot of different companies that were they're making some crazy moves about a year ago that essentially just died, and you're starting to get that cycle of a lot of stocks that sound really good, have great potential, are starting to kind of die, and they're not providing. You're seeing in the earnings they're not holding up, and so they're dying off and getting 80 to 90% haircuts on their price, and some people think that they'll come back which they eventually probably will sometime down the road. But again, we've had so much money injected in the system that you see that massive spike, and so I think it's going to be a couple of years before a lot of these companies come back to those previous highs. This is why I talk about going with a lot of the stocks, the industry leaders, because of the fact that they've already proven themselves. They've already had essentially a battle tested strategy that is currently working, and those are the ones you go with because they have the experience. And then later on, kind of trickle down into when some of these other companies start doing better, given the circumstances. So going forward, market sentiments, there's not really a lot going on until May. And even still, if we do have a double, they're pricing in a lot of really crazy rate hikes right now. They're getting extremely high. I think they were talking about 2% or something over the past week towards the later half of the week. And then you had a lot of Fed members getting extremely hawkish. Market doesn't care about that anymore. It's got its first rate raise. That's what we were waiting for. We kind of got a time frame. We have to understand that the market has always had rate raises before, so this is nothing new. It was that initial shock, right? You've gone a year and a half of having almost 0% rates, right? And then now you've coming back up to um, a 25 point basis move and eventually trying to get to that 2% again by the end of the year. So you're going to have a double rate hike. But again, that's in my mind, that's just not going to do anything to the market. The market's used to that. It's whenever if there's something in normal process that's going on, it's not going to matter. And something I've talked about this week too on my daily updates is that, you know, data at one point had a lot of weight because the Fed was looking at data coming out, your CPI data, your PMI data, right? All the Fed was looking at that stuff to make a decision. So it held a lot more weight initially. Now that we have that, all the data that comes out, it's not really going to have nowhere near as much weight as it once did. So that is what we got essentially from state of the market is, in my mind, we're bullish unless something really changes. So looking, and I've been talking quite a bit already in this video about the state of the market, but coming up events, we got 2 earnings this week. My biggest one I want to watch is MU because of the fact that chips have been actually absolutely dominant in earnings. This is still Q4 earnings for MU, Q4 earnings for NNDM. I just kind of want to watch NNDM. I just talked about it. It's had a major haircut since even last year when it was trading almost, I think it was almost at $20, and now it's been way down in the $3 range for a while. But I want to see how they do. I think if I could start getting some steam, especially in this current environment with inflation, I think it's one of those companies that can really start possibly making a big push back up. Again, I don't think it's going to reach all-time highs anytime soon, but we have to see how that plays out. But MU, again, chips have been crushing it, and I think this is one of the laggers when it comes to chips. And so I think looking into Wednesday morning, if they do well, this might be a good position to take after earnings and play continuation on. So that's why I'm bringing this one up. Events, Russia, Ukraine. Again, I just talked about this. We'll have to see what happens there. And then these other ones like PCE and price index, unemployment rate. These things matter just to kind of have an aware of what's going on, but they're not going to move the market. Not any, again, data isn't going to move the market at this point. You'll get a small move in the morning when this does happen. Obviously, it'll be a very quick move, and then typically it'll either keep pushing, or perhaps start a little sell off, but it will more likely wick back and continue to push. Again, none of these have as much weight, but they're worth mentioning for this week. Watch list. I got Tesla. Now this number here is expected move. I haven't added this before, but this is something I do look at. And it's something, this is why I like trading beta stocks a lot of times, because they're expected moves. It's a 63 point expected move this week. Google 78 point expected move, right? Shop 61. This is why people trade these stocks because of that. And also some of these stocks like AMC, it's a $4 move. You're like, okay, well, why would I want to play AMC for a $4 move? But on AMC, a $4 move is like 160% move. So just keep that in mind. So you need to be watching these. And the best way to get these numbers is given off of options. You can look at what the expected moves is on the options, because they try to price that in. And so these are always good to watch in the beginning of the week. So I'll start adding these when I'm doing this. Something I wanted to do before, but I haven't done. So I got Tesla, Google, Facebook. Facebook, I've talked about. I don't like their fundamentals right now, but they're starting to catch steam, and I think a continuation, it might be a leader again here shortly if it continues to push. UPST, I think, is at a good level. Shop is at a good level for buying. Again, momentum into MEMS has been going on lately, so watching that. MU earnings, Square, like technicals. Coin, fundamentals and technicals on that one, technicals on AMAT, and then technicals again on Google and Tesla. So let's get right into it. I know this video is already, you heard me ramble for 10 minutes. So Tesla, what I'm looking at here, again, I'm looking for a pullback, and it's going to happen at some point here. It's just being patient until it actually comes, but I'm kind of watching that 915 mark. Once we get a retest out of here, I think we're going to bounce huge, but it's just being patient enough for this thing to come down. Yes, it looks like a bull flag, but it's not. It still needs to retest. If it's not retesting and this thing continues to go parabolic, when it stops, it's going to elevator down and it's going to come crashing down. So you want it to be back testing these levels. If it doesn't, you're asking for trouble for it to keep pushing up. And you're really playing with fire, because again, every day, if you're trying to swing something, that overnight session is, you're going to get one news event and then the whole thing is just going to come flushing down. So you got to be mindful of that. So watching that level this week, again, it looks like that the 1040, maybe the new wall to break through. So we have to definitely see where that goes. But again, I want to see if I can get again, 913 mark entry on Tesla. That's what I'm really looking for there. And Google is the next one I have. Um, Google is the same thing. Looking for a pullback. It did pull back briefly, but I'm looking for a deeper pullback to the 27.18 mark, if that's possible. Again, there's a lot of FOMO coming into the market. People are starting to buy because of inflation, try to be an inflation hedge. So the pullbacks is what they're looking at, and I'm looking at the 27.17 mark this week. Uh, Facebook. Facebook again starting to catch momentum. I'm really watching this 212 mark on Facebook. If it can hold that, looking for possible 234 run. So again, Facebook, I'm really looking at the momentum there and see how that goes. But I do like Facebook this week. Again, it's got a 10-point move, which is pretty solid for Facebook considering. I think it will probably make, once it catches momentum, it makes bigger moves than that. UPST is the other one I have. I talk about this one quite a bit. It is starting to wedge. I'm really watching that 100 mark coming into this week, possibly even that 86 mark. So those two levels I'm watching. May even wait for 86. It is making a. You want to watch this to make sure it's not making a lower low here. Is ultimately what I watch. So you almost got a channel here, which looks like it's wedging. So we might even get an 80. If it does hit 80, I definitely want to try to get into it. So definitely a level I want to watch, especially if we start making a descending wedge, because a descending wedge normally means a bigger move to the upside. So that might be a good entry point at that 80 mark. So I want to keep this one on watch this week. Especially going into earnings. I think it's going to have another big earnings and it will continue to rip up, especially if the market continues to rip. So if I can get one last good entry on this one, that's what I'm looking for there. Shop. Shop has been held down by this trend line. I'm really watching for a break above this. It's been hanging around that 708 mark. It's been that kind of fluctuating between that and the 675. Maybe we get a retest back down to the 592 if the whole market gets a pullback, which I think if it gets a pullback, that might be the last chance before we get a good run into the remainder of the year. Again, I think there's a lot of different things that could play out that could possibly keep the market down and continue to chop. But we have to see as far as how long the war is prolonged and everything like that as well, and continued sanctions and how that plays into earnings going forward. But I definitely want to shop for that, either that trend break or that break back down to 586. Could be a good possible entry, hopefully, and then obviously watch that to hopefully not break. You don't want to go back down into this wedge. In my opinion, we might just continue to play back down in this whole range here. And we want to really try to hold that range, that 681. So we really don't want to give up 681. But again, those are the levels I'm watching on that. Again, still chopping a bit. But again, once it breaks out, I think you got a lot of headroom here to start running back. I can see us revisiting 1,000 here pretty soon in the foreseeable future. So AMC is the other one I'm watching, and that's definitely a short-term play. I don't like investing in companies like this because it's a pure momentum stock, right? It's a mem stock, and you really have to be careful with these. These are ones to invest in my opinion, and come crashing down really fast, especially if there's fear in the market. It will come crashing down. So, but watching this 19 mark for possible entry, you're looking for a retest, and I think we get a nice pop up to possibly the 25. So watching that, since there's been a lot of momentum, and you'll notice too that if the momentum comes out of tech, it flushes straight into it's been flushing into MEMS. It's one of the rotations we've had, and so if it does, I think we can catch again a nice pop there. And even though it says $4, you're right, that's 164% move on AMC. So kind of watching that this week. MU again, earnings. This is MU is big about MEU, yeah, again, this pick is mainly all based off of earnings and continuation. It's been playing this chop here again from this 75 mark up to the 80 mark or 78 mark. Again, we have a lot of overhead resistance. I think if earnings does well, we break over this, and the market continues to push. Again, I think we're going to get a nice pop. It did have some bigger moves because it was underpriced. We were getting these nice big pops here. I think the CEO came out around this time and pushed this thing way back up again. And then obviously with everything, the sanctions and everything going on and the fear there in chips, it sold off a lot. So really want to keep this, especially with earnings. Again, you might get a potential sympathy play on other chips if this does well. So just keep that in mind. NVIDIA has been pushing up quite a bit as well as AMD. So those are ones to potentially look at as well. SQ is the one I'm looking at as well. I like it technical wise. Want to watch this 125 mark for possible entry. And then if it holds that, again, you can keep your stop right there. So if it does break below that, you're already out. But if it does continue up, I think we get a pretty clean shot, possibly up to 175 again. Again, they did great on earnings. That was a concern before, but you know I'm a huge fan of Jack, so I think this thing can start making some room and pushing back up, especially with their, you know, they have a physical bank location now, and they're doing a lot of other things. I know Jack's talking about getting more into crypto, and again, I think this might be the year of crypto. Even though there has been some mass adoption, I think we're just seeing the beginning stages of that, and I think later on this year you're going to see a even more bullish push in crypto. And again, that this has been playing along with crypto, so I could see this making a big run this year in general. Coin, and speaking of which, I got coin next, which coin has definitely been one I've been watching on and off because I'm waiting for just Bitcoin in general to turn. And I think coin is right around that area. It's very close. Really watching this 180 mark, as long as it'll hold the 180 mark. And then potentially we need to break that 195 mark. If we can break that, then I think we've got a clean shot up to the 240. Again, once you catch this break on the 197, it's going to go parabolic, I think, pretty quickly. It's not saying it's going to hit the 240, but I think you got a pretty clean shot to make that up there, or pretty close to that if it does break there. And again, if you are entering at 180 and it breaks 180, then again you're out and you don't have to worry about it. Again, a lot of these have wedge breaks. So looking for these, how they hold in these levels, and if they hold while the market does whatever, that's a good sign that you're possibly reversing back up and pushing back up. So that's what I want to watch. Coin's got an expected 14-point move, so that's something I definitely want to watch. And then the last I have one on here is AMAT. AMAT technical wise, it looks really good. We may have missed the dip here at the 135 mark. But something you definitely want to keep on watch, something I want to keep on watch this week because it's clean. It's a very clean chart, and you don't see this very often. This looks like almost a perfectly clean chart here. We did have a retest perfectly right there on the wedge, and then a breakout. Now you get another retest here at the, again, 135 mark, and I guess you can get a pretty clean shot up to 144. And then if you break 144, you got a clean shot up to the 158 mark. So really watching this one this week, especially if it starts to really get some momentum and see where it goes. But that is what I got. I know this is a longer video. If you made it this far, I appreciate you. Go ahead and hit that like button. Until next time, I will see you guys later.